Hey, welcome everyone. Tom here from Park Avenue Trading. For those of you that you know me, I want to bid you a good hello. For those of you that don't know me, I'm a retired chief trader with over 35 years experience in trading Forex and commodities. And today I'm going to be doing a video on my big three fuck ups. And believe me, I got a lot more than three, but I'm going to go over some that are a little bit off the beaten path. And I want to talk to you about them and maybe help shed some light on some of the areas that you might be having problems with that you can really quickly overcome. So before we go any further, please, if you like what you see, like, subscribe, don't forget to ring the bell, and this way you get all this pertinent information that I'm going to be throwing out at you. Well, first, number one that I want to go over with you is something that is called apaphonia. And what apaphonia is the ability to see things that are not there. Example would be that you're sitting at the beach, you're looking up at the clouds above, and you say, "Hey, I see Mickey Mouse," and you hit your friend next to you, and you go, "Hey, you see Mickey Mouse in that cloud?" And then you have to explain to that person how you see Mickey Mouse, and eventually they'll say, "Oh yeah, I kind of see Mickey Mouse, but I really see, a piece of cheese." But so that's apaphonia at work. It's the ability of the mind to actually see things that aren't there. And how does it relate to trading? It relates to trading in the respect that if you know too many technical patterns, you could begin to actually have apaphonia. So the marketplace is moving up, and you have a certain pattern that you're looking for that basically can show that the marketplace is going to go back down. You take the trade, and the trade does not work out, and guess what? You start to think, "Whoa, darn, I shouldn't have taken that trade." That's not true. If that's part of your trading system, you should have taken a trade. As long as you have risk control on it, it's fine. But apaphonia occurs when you're in a good trade and you're starting to see patterns that are occurring that basically should tell you that you should get out of the trade. That's what you really have to be conscious of. You have to really take your patterns and use the patterns that talk to you the most, the best patterns that you have, the ones that you like the most, and actually go with what the trend is. Now, when I said in the beginning of this video is my three big F-ups, and I'm going to be going off the beaten path a little bit, but the one thing that I want to say is that the mistake family has a lot of uncles and cousins. So you can make one mistake, you could vow that you're not going to make that mistake, but it has a very, very close relation to another one that pops up, and guess what? You basically have another error in your trading. Okay, so that's completely normal. The way that you overcome these mistakes is by actually making sure that at the end of the trading session, you write down exactly what you did. Did you follow your system? If you followed your trading system and you lost money, you didn't make a mistake. That's that's right straight from Van Tharp. So if you read any of his work, he's basically the first person that ever told me that in 1990. He said, "Hey, did you follow your trading system?" "Yes, I did." Then you lost money?" "Yes, I did." Then pat yourself on the back twice because you followed your system. Now, you write down what went wrong and you learn from it. And that's one of the most important things that you can do when you make a mistake like that, especially a technical error. Now, the next one I want to go over, I got my notes right here because I just got back from holiday. So I don't want to go over that one. I'm going to go over basically the second one. I think the biggest one is like not being patient with yourself and not being patient with the market. People make trading errors when they're too impatient with the marketplace. They want to buy. Okay, the marketplace is moving up, they want to buy. Yet they're too impatient to wait for the retracement back down to get in a good level. Maybe you want to use a Fibonacci level, maybe you want to use a measured move type of level, but you're just too impatient. Okay, so you buy, and guess what? The market turns right after you buy, and you start kicking yourself, "Oh my goodness." Then you start doubting yourself. You start wondering whether or not it's a good trade at all. It's the worst place to be in. So if you learn to be patient with yourself, and learn to wait for the market to come to you so that you could trade on your own terms, then you'll have much better results. So number 2 F-up is don't be impatient with yourself. Number 3, okay, and one of the big ones, okay, is actually adding to losers. Never, ever, ever add to losers. Okay, you can only add to winning trades, not losing trades. The marketplace must prove that your idea is correct before you could add to a trade. Averaging down is never a good idea. And there's 99% of traders that wash out add to losers. So I want to leave you with this real quick video, 3 F-ups that you can work on personally to get better. If you like what you see, again, like and subscribe. Also, don't forget to go to Park Avenue Trading and get yourself a free technical ebook on how to overcome head fakes in the marketplace. It's a really good little system that you could use for pivot point breakouts, trend line breakouts, wondering whether or not the trade should basically perform. And it's also a great way to realize, well, if the trade is not performing, that you should step aside. So I look forward to seeing the next video, and good trading. Cheers.